From Markets Value. So today we're looking at Amazon, and they just released their earnings. Any after hours pricing is $96, down 12.73%. So obviously the market did not like it as much. Let's dive into the numbers and then we'll find out really. So net sales increased 15% to 127 billion. That's compared to 110 billion in last year. But they do say it was heavily impacted by foreign exchange rates. And if it was not impacted, it would have gone up by 19% for that comparable period. So why does that matter? Well, just if you just use the same figures as last year, it just means it's much more easier to compare. Also, highlights the performance, the true performance of the company. So if we actually count at that, they would have done 19%. They're still keeping up some really, really good pace. For the numbers that they're doing, that growth is really, really good. And if they can keep doing that, things will do well. North America's segments increased 20%. So you can see out of that $127 billion, $78 billion is from North America. So that's easily the largest segment for Amazon, and that's their core market. The international segment decreased 5%. So obviously international market's not doing too well. And that's only brought in 27 billion. So 27 billion compared to 78 billion, you know what market they're really going to be focused on, and the market that they're doing really well in, because they've increased that by 20%, whereas international, they've decreased by 5%. AWS, which is basically meant to be the gold mine that helps support the company, that increased 27% from last year, and that was $20 billion. So overall, the AWS is the smallest segment out of the three, but over time, it's going to really, really catch up. Like next year, we should see it up with the international segment, and then after that, it should surpass the international segment. So AWS is just the one to watch for the company. That's the one that's really starting to just power home everything, because it's also the one that's bringing the most income as well in terms of profits. So if we look at the operating income, that decreased to $2.5 billion. That's compared to $4.9 billion last year for the third quarter. So North America segment, well, they operated at a loss. So they do $78 billion and they lose $0.4 billion. And that's compared to them earning $0.9 billion in operating income last year. So we look at the international segment, and that's by far the worst. Like, their operating loss was $2.5 billion. But of course, it was a lot better than. Actually, it was not better. Actually, it was actually a lot worse. So the operating loss was 0.9 billion for last year. So the loss has actually increased by quite a bit. AWS income was 5.4 billion. So you can see that AWS is clearly the one carrying the company in terms of that profitability. And that compares to 4.9 billion. So even though they're facing tough times, AWS is still managing to increase their net income. Overall, still looks pretty decent. Like, net income was 2.9 billion, and that's compared to 3.2 billion for the prior year. And I guess they can basically thank AWS for helping them bring this up. So overall, these numbers look alright, but I think it's actually the guidance that the market's looking at and are not liking too much of it. So there's a lot of reading that you can do here if you really, really want to. If you like the company, it's always favorable, always great to read into the details. So the net sales is expected to be $140 to $148 billion, and that's a growth of 2 to 8%. So very slow growth. You compare that to the recent numbers that we just looked at, that was 15%. And if it wasn't affected by foreign exchange rates, then it would be 19%. So here we're looking at their fourth quarter, and they're only expecting 2 to 8%. So that's a big drop in growth, and hence the market doesn't like it because, well, the minute you drop below 10% growth, you really start losing your status as a growth company, and that's a worry because every quarter going forward, we know the economy is getting worse. It's getting closer to a recession, and things do not look great. So that's the situation that we're facing in that sense. That hey, if next quarter is not great, people are scared about what's going to happen next year when times get tougher. So that's the one thing. I think that's what, when people are looking at the share price and they're going, why did it drop on the third quarter numbers? Well, third quarter numbers were pretty decent. The numbers people did not like was the financial guidance. They do expect it. They do expect foreign exchange rates to have an effect of 460 basis points, or 4.6%. If you don't understand what basis points is, it's just basically percentages put into kind of like whole numbers, and to really work it out, just put a dot after the last two numbers, and then you got a percentage number. So they expect operating income to be zero to $4 billion, compared to $3.5 billion for last quarter. So I mean, that kind of guidance is quite wide, and it basically still covers what they did last year, but it's likely going to be at the lower end. That's my guess anyway. But I think I put 4 there just to make it a bit more pleasing. I don't think they'll get that high because they sound like they're going to be facing some really, really tough times, much higher costs. It's just, I don't think they're going to do as well as as it may look compared to, like, the third quarter looked great in comparison. And fourth quarter is going to be what really just puts a stinger into this stock. So in terms of that, the minute they hit less than 10%, basically this company is a lot less valuable than it is right now. We could see this continue to drop further. So at the current pricing, I do not think it is a good pricing. I think the price still has room to drop, particularly on that weaker guidance for fourth quarter, when fourth quarter is actually meant to be the more successful quarter, of course, because that's when a lot more demand generally comes in. But, you can interpret it as you wish. So I do expect the share price to come down. Like, I think it probably has room to come down to maybe $70 to $80. I think that area is probably more or less what it's really worth, given the slowdown in numbers. But if they do pick it up, of course the share price will pick up after that. But if they do a worse guidance next year, say like first quarter, then you could easily see the stock price come down to $50-$60. So that's the kind of thinking you really, really just have to think more clearly about, because the company's trading at a much lower value. The performance is not matching up. So the valuation is too high for the current performance that they're doing, and the market kind of sees that. So I think, based on what we're seeing right now, I think the share price is still going to drop a little bit more, particularly with the wider economics, where we're expecting lower consumer demand. As interest rates kind of move up, it puts a lot of pressure on households. They're going to be spending a lot less. And when you're someone like Amazon that sells to the whole general market, when the general market pulls back their spending, you're basically going to see their sales drop. If not, they're not going to be able to increase the pricing by much. Hence, their margins are going to come under pressure a bit more. And I don't think the coming quarters for Amazon is looking good. So I think overall, definitely not a stock to be thinking too much about right now, because I think they're not. I don't think the market really has thought all about how things are going to be yet. It's dropped by 12%, though I think it can drop a bit more. So right now, I don't think right now is a good pricing, or it's not a good bargain anyway. As Warren Buffett used to say, buy with a margin of safety, and if you can do that, it means even if things do go wrong on a further, on a larger scale, at least you're still protected. But if you buy at this pricing here, you're not protected against any other things that go wrong, and chances are in this kind of economy, plenty of other things can easily go wrong as well. So that's all I really have to say about Amazon. If you have any questions, post below, or any comments. Until then, good luck investing, everyone.